Hey YouTubers, welcome back to my channel. So in this video, we're going to be looking at when the next market crash is going to happen. Now, is this going to be by the end of 2020 or will it happen in 2021? I mean, one of the biggest things we need to know is when are people going to start fearing the market again? Because this essentially is when there will be a crash. So while you watch the intro video, make sure you hit the like button because it helps the YouTube algorithm recommend this video to other people. From the get-go, I'm just going to tell you it straight. It's very difficult to say for sure when exactly this market crash is going to happen. However, one of the best things we can do is look at the history of the markets and analyze what the cycles were. So let's jump straight into it. Now, probably one of the most well-known market crashes was in 1929, and this was the Great Depression. Now, essentially what happened here was many investors became over-leveraged. Now this basically means that they borrowed too much money in order to purchase stocks. Then when the market bubble popped, those investors couldn't meet their debt obligations and ended up going into bankruptcy. Now it took the economy about 12 years to bounce back from this. Now it didn't really help that World War II was going on during this time, so clearly that had a huge impact on the long-term recovery as well. Then we had Black Monday in 1987. This is where the markets fell 22% in a single day. Now this crash also had the highly leveraged borrowers, but at the same time, there were also highly leveraged corporate takeovers and buyouts that took center stage. Also during this age, computer trading made it even easier and faster to place sell orders. This eventually resulted in the stock market introducing circuit breakers into the trading platforms. Now this literally allowed marketers to pull the plug on future high-risk market trading days. Then we had the beginnings of the technology boom, from the likes of Microsoft, Apple and Cisco, driving a strong bullish market for the next 12 years. Then we come along to the dot-com bust of 1999 to 2000, where technology brought along the interest in internet stocks. Now these were booming throughout the 90s. For instance, Globe.com. Now Globe.com, most of us these days wouldn't have even remembered them or wouldn't have even heard of them. But essentially they were one of the first social networking services, where users can post their own web pages, chat to each other, and play games against one another. Now Globe.com back then had an IPO, where the original asking price was $9, but then they ended up opening at a whopping $87 per share on its first day of trading. But like many other dot-com businesses, investors started to sell their highly inflated tech stock, which led to 2 years later where Globe.com was trading at $1 per share. Now things only really started to recover once Wall Street decided to more accurately evaluate the real financial stability of high-tech companies, simply due to the fact that investors became more discerning and more conservative about which stocks and funds that they wanted to purchase. Then 8 years later, we had the Great Recession in 2008. Now this is where the Wall Street Bank's high-risk trading practices nearly took down the greatest economy of the world. Now basically what happened was mortgage-backed securities, which were then also backed by the US housing sector, were sold by financial institutions to investors, pension funds and banks, and more homeowners were not able to meet their mortgage obligations. This consequently resulted in financial institutions going bankrupt. Now there's a great movie, The Big Short, starring Christian Bale, Steve Carell, Ryan Gosling and Brad Pitt, that's based around this Great Recession. If you haven't seen it, I recommend you go and watch that, The Big Short. So now 12 years later, judging by the history, we're due for another market crash. Now, like I mentioned, it's not easy to truly predict when that crash is actually going to happen, but we can look at other indicators. Another indicator that can be used in order to identify when the next crash will happen is the unemployment rate. So as we can see in this graph, UK's employment rate has been doing pretty well in the last few years. And naturally all the countries have seen a huge spike in unemployment due to the coronavirus in this year. And obviously there's some great news with the economy starting to open up again. However, that plus the government starting to ramp down their financial relief, it will be hard for companies to continue to keep on all of their staff due to the current safeguarding measures put in place in order for companies to actually keep their doors open. This therefore means it's inevitable that we will see some more job losses in the next few months. If there's so many people who are not working, this also means that there's not enough people to sustain the output into the economy that we previously had. But by keeping a close eye on these unemployment rates, we could identify and get a better idea of when the next crash will happen. Now, another good indicator is always listening to the billionaires that are already out there in this world investing. So for instance, right now, they're pretty much saying that the current stock market looks to be overvalued. And also it doesn't help with the fact that the government has pumped in a whole lot of liquidity into the markets over the last few months. And naturally, when money is just created out of thin air, that just devalues any currency. But the big question obviously is, when is this crash going to happen? And like I said, unfortunately, it's not actually possible for us to tell you when it exactly will be happening. But if history is to go by anything, we know for sure that it's going to be happening sometime now. And like I mentioned, one of the other key factors is listening to these billionaire investors. So here is something else that Warren Buffett has mentioned about this. He basically said, you measure everything against interest rates basically, and interest rates act like gravity on valuation. So when interest rates were 15% in 1982, they would pull down the value of any asset. And so the opposite applies right now, where the interest rate is so low. Therefore, there is no gravity being put on the stock market. And this essentially is why the stock market is so high. Now, currently in the UK, the interest rate is 0.1%. And in the US, it's 0.25%. Now, in both cases, this is all-time lows. This basically means that investors are taking their money outside of their banks and putting it into the stock market. But naturally and eventually, the interest rates will start to increase again. And when that happens, investors will start putting money back into banks. Also, while the interest rates are so low, this also gives the opportunities for companies and people to borrow a lot of money. But guess what? A lot of that money has been used and is still being used to buy back shares in the companies that people already own, which essentially puts a false idea of economy on the stock market as being really high, which in turn makes the consumers feel comfortable with the economy so that they end up spending more money and borrowing more money, therefore getting into more debt. Now, to be honest with you, there is no sure bet that the market will even crash at all, which is probably why all the well-known investors have not come forward and decided to predict anything on the short term. So at the end of the day, we just need to watch these key indicators like the unemployment rates and the interest rates in order to get a feel as to how the economy is doing. And then maybe closer to the time, we can give a prediction as to when the crash is actually going to happen. I hope you enjoyed today's video. And as always, make sure you hit the subscribe button and click the bell button as well so you get notified when my next video comes out. And don't forget to like, share and comment. See you in the next video. Bye.